exciting. We're talking about stable coins, what's all the rates. So today, this week has been pretty exciting because we have a massive debate in the U.S. Senate about the Clarity Act and how crypto assets should be regulated. We are so close to crypto industry finally becoming integrated with the rest of financial services, and obviously stablecoins are driving that revolution. So today I have with me some of the best experts, two of the best experts. So Jelena is the founder of Noble, the first, as far as I remember, the pioneer stable chain for stable coins. I think you've been around more than 2 years. And Ronit Ghose, 3 years. Wow. And Ronit Ghose, the author of Citi's, the lead author on Citi's stablecoin report that was cited by none less than the U.S. Treasury Secretary, Mr. Sesson. And he is also the author of Future Money, a book I strongly recommend everyone read, and I share it all the time. Because it's quite a nice book. I mean, Ronit has studied this space quite deeply for years, and I've been honored to be, his shitcoin whisperer. Anyways,
my DJ whisperer.
So we'll start with Ronit. Ronit, what's all the hype about? I think you guys were cited as saying stablecoins will reach 3.2 trillion in total market cap by 2030. Did you just pick that number out of a hat, or did you guys run a quant model on it?
You've just picked the number out of the hat, Ajit. So what we did in April, we published a report called Digital Dollars. In that report, which was largely about stablecoins and the use of blockchain by banks, the public sector, governments, we said that our base case for stablecoin issuance volume would be 1.6 trillion. And our bull case would be 3.7. Those are the numbers that Treasury Secretary Bessent tweeted out in June when the Genius Act was first going through Senate, the Senate. We subsequently, given the amount of activity we can see in the market, we subsequently increased those numbers. In September, we published an update in a report called Stablecoins 2030. And we said that 1.6 we think is near 1.9 as our base case. And the bull case we have is 4 trillion. What was really interesting is that when Treasury, I assume someone in Scott's team drafted that tweet for him and gave it to him. I'm assuming he hasn't actually read my report, but it's the Treasury team that drafted that tweet. Maybe he drafted it. I don't know. They went for my bull case, not my base case. And for me, that was the biggest, most interesting point, apart from the kind of stuff being tweeted out. But it was that Treasury went for my bull case, not my base case. How do we get to the numbers? We can unpack this over the next hour if you like, but I don't want to bore you right up. Too boring. But we basically looked at all the key drivers: the crypto industry, onshore commerce, real economy, if you like, and then offshore international demand for dollars. Those are the three key drivers.
Awesome. So I mean, we're going to drill into that a bit more. Jelena, what made you, because see, now stablecoins are like plastics, right? When I think about Dustin Hoffman and Mr. Robinson from the famous movie The Graduate, and he takes this kid aside and says plastics, right? So I kind of see that with obviously AI, and I see that with stablecoins. But you were so ahead of this. What made you start Noble 3 years ago?
Yeah, well, first, Ronit, thank you for that report. It was a required reading for our team because I think it really set the foundation for what's to come. Just very quickly, like we forget about 6 years ago, January of 2020, the market cap for stablecoins was like less than $1 billion, right? And today it's over 300 billion. So anyways, very excited for all the growth. And it is a great report that everybody should read for those that are following the industry. For us, it's a good question, Chain Yoda, because when we started Noble, it was actually out of a very specific need. So, we've obviously known each other for some time. And back then, Noble was solving for liquidity fragmentation across an ecosystem of many sovereign layer ones, which of course we refer to as the Cosmos ecosystem. So, that really was the initial concept: bring native assets to an L1 purpose built for those stable coins. And we made sure that Noble was, from first principles, built for that use case, right? So we had the proof of authority validator set. We figured, hey, if you're a blue chip asset issuer, if you're regulated, if you're compliant, if you're doing things the right way, you probably feel more comfortable issuing on a layer 1 that has validators validating the network, which are kind of vetted, right, and that are institutional, and that are do their operations properly, let's say. Another thing was obviously paying gas fees and stable coins. It sounds simple now that's basically a standard, but gas abstraction 3 years ago was not really a reality in most ecosystems. And so we said, hey, if you're an application developer, if you're an asset issuer, let's make sure that you can that we could offer gas fees and transaction fees in the native stable, like USDC. So all of these, quote unquote, simple design decisions, I think, came from just a very specific objective, which was, let's bring native USDC, to this ecosystem of many chains. Let's make sure interoperability, liquidity fragmentation, fungibility, all of these concerns are solved for. And we did that. So that was 3 years ago. The world looks very different now, which is why we're basically building to kind of match that reality, which obviously we can get into what that reality looks like today versus 3 years ago or 5 years ago. But it's been a very exciting journey. So technically Noble was the first purpose-built stablecoin layer 1. We can argue that Terra was also designed for that, but Terra never had a stable.
We're not supposed to say that. Yeah, it's funny because I had Do Kwon on my show with Brett.
Yeah.
Right? So Brett and I used to be crypto co-host for Brett King's FinTech podcast, and we had Do Kwon talk about it. So his vision wasn't wrong, but oh my God,
it was
the foundation. Just the foundation was off. Everything else, the whole edifice on top was. Anyways, moving swiftly on from that topic, because we don't want to get the anti-stablecoin Democrats excited or whatever it is. So Ronit, where is the demand coming from? As in, is this like a no KYC thing, or is there like some sustainable demand behind? This is a question for both of you, right? What are the use cases? Why do we need stablecoins? I mean, India seems to work just fine. We have UPI over there, and in Brazil we have something similar. Why stable? And China doesn't like stablecoins, so why stablecoins?
Sure. So when you look at payments, domestic payments in about 80 different countries in the world, already real time. So here in the UAE, where we're based, Ajit, in Sweden, in the UK, in India with UPI, Brazil with Pix, we have real-time payments up to a certain amount. It's often like, 50,000, 100,000 in the country currency. But small value, medium-sized value, real-time sorted. Inside Europe as well, when you're looking in the Eurozone or into the SEPA region, Single European Payment Area, again, it's real-time cross-border, France to Italy, Germany to Spain. The use case of stablecoins is in certain niches. Obviously, you know this better than me. It's really still very much a crypto industry product. And I know people talk about, wiring money through a stable coin and showing the schemorphism of being a boomer saying wiring, but sending money from Austin, Texas to Lagos, Nigeria to your mom using a stable coin. There is that, absolutely. But the vast majority of stablecoin activity still is
crypto trading.
Yeah.
Like Tether across exchanges, inter-exchange volume from Tether.
Carry on growing. That's the use case of stablecoins. It's on-chain cash. Now, one leg that's going to happen is if you believe that finally we're going to get real-world assets or financial assets on-chain, which we've been talking about for years, but maybe at some stage it'll happen. And we've got money market funds on-chain. You're going to get, we've had bonds on-chain forever, but if you get a bit more activity there, we now have a cash leg, a regulated cash leg in the US after the Genius Act. We're going to have something, and in Europe with MiCA, we haven't had a regulated on-chain cash leg. So that could be working together as a growth area. Just like stablecoins was the cash leg for the crypto industry, stablecoins could become the cash leg for wholesale markets, wholesale markets. Then I see a big other area of growth in terms of e-commerce, e-tailing, or retailing in general. Stablecoins basically being embedded into loyalty programs. We have loyalty programs across, I'm flying constantly out of Dubai. I'll be on a plane again this Sunday, heading to Switzerland, and it
Yeah.
will be, more skyward points for me, I hope. They're stuck inside this one.
Ah.
Uh,
Oh, right,
Starbucks
right, right.
loyalty program, all these loyalty
Yeah, right.
got a stable coin in there. Oh, Amazon, right? We get Amazon deliveries daily in our
Mhm.
house here in Dubai. Um,
Yep.
why not make Amazon Prime's loyalty program bundled to a payment program? I'm just making this up, right? I'm sure Amazon are
Mm,
paying for
yeah, you might be making this up, but I think I've seen Jelena's tweet. She might be building it.
yeah.
She will, yeah.
So that's kind of areas I
Yeah,
see. And then the other
right.
stuff that's kind of gray area, digital hawala, I leave to you, Chain Yoda. I don't do that kind of stuff.
Yeah,
Yeah.
you got me. You got me. You got the crypto
But
schmuck
you can
from
do that,
Dubai. Yeah,
right?
that's right. So,
Yeah.
yeah, this is really funny. So, I was in Redmond with some friends from Microsoft, like the IIT Cabal. And this is the first time I've seen them bullish on anything related to crypto, right? I mean, I think they don't know what I do for a living. I think they're very suspicious of what I do. But finally, I think they were talking about like cutting, Microsoft is a very, very large chain of merchants and suppliers, right? I mean, it's a huge, huge, huge ecosystem. And they're finally excited about, oh, wait, we heard about stablecoins and how we can, take some costs out and things like that. Anyways, so Jelena, what's this loyalty points meta? I've seen some of your tweets.
Yeah. Yeah, sorry, I just have to touch on this. It's
Yeah,
so
yeah.
funny, right? Your friends that finally see a use case for crypto. There is a
Mm.
tweet yesterday from one of the Fed Reserve chairs, I think Kashkari, and he said, crypto is basically useless except for stable coins and maybe some DeFi things and maybe some on-chain equity. It's like, well, so are we just redefining what crypto is based on what they believe is useful? I mean, it's kind of a funny way to spin the story away from the fundamentals of crypto, which to be clear, also underpin stablecoins, right? And the technologies that drive the adoption of these coins. But yeah, I guess going back to Ronit's point on kind of loyalty programs, it's really interesting. And I feel like right now there's almost a perfect storm of things happening that are drawing attention to this topic, right? So obviously, stablecoins themselves as this new payment instrument that, of course, is now legislated under Genius. It is now a legal payment instrument. So, thank you very much to the administration for pushing that. That was a big win. So that is, at this point, maybe old news. What's new news is what's happening, the political front, right? We have Trump saying that he wants to cap credit card interest rates at 10%. And now you have the rewards kind of banking kind of industry saying, well, hey, that's going to kill loyalty programs, right? Like to get your Sky Miles to, get your Amex points and kind of have a, kind of juicy, rewards with your favorite retailers, that actually might kill that because basically, as we all understand, reward programs are basically wealth transfers from people that can't pay that interest rate on their balance to those that can, and of course can take
Mhm.
advantage of those points and be rewarded for
Right.
being high spenders and paying their balances. And then the third thing, again, it's a perfect storm, is what's happening on Capitol Hill right now with the Clarity Act, right, and stablecoin rewards. Basically, you see this incredible fight with by the banks, basically saying we don't want to pay. We don't want stablecoin yield to be passively passed along to kind of users, even by third-party distributors like a Coinbase, right? We want certain actions to be taken. And so there's this very interesting kind of, I would say, effort to basically, kind of keep the legacy system working kind of as it should, right? With the kind of traditional credit card pay for rewards model. So listen, a lot of these things are happening in real time. Nobody has a crystal ball, but if we just take a step back from like an innovation perspective, and also just like a consumer habit perspective, I do believe there is great demand for a cash-like product, i.e. a stablecoin that basically acts as a rewards loyalty mechanism for brands to basically kind of keep that like real-time engagement for consumers. Again, how those rewards are passed on, what actions people have to take, how that's legislated, under clarity or not, because a lot of folks, including Brian Armstrong from Coinbase, are basically saying clarity passes as in its current form. We're not supporting it. So in any case, all of these things are happening in real time, but just from a consumer kind of habit, kind of looking to the future, I do think young people, would go for something like a stablecoin powered rewards program where basically you hold the asset, you spend the asset, you stake the asset. You can, obviously gamify incentives within that coin on a real-time basis, and you can really keep that kind of engagement flowing and loyalty flowing with brands. So
I see. So,
anyways, it's a perfect storm. That was a lot. There's a lot to unpack there.
This is funny. Before I became as Tarun Chitra, right? Our famous friend Tarun Chitra says crypto schmuck. So before I became a crypto schmuck, I used to be a fintech influencer, spoke at Money 2020, I had, and things like that. And my Twitter handle used to be embedded finance because there was all the rage. Angela Strange of A16Z had come out and yapped about how Uber, and this is what 2019 when I was still employed.
You're always ahead.
I don't know, sometimes too far ahead. So 2019, I think embedded finance was all the rage, and Angela Strange was talking about Uber and Lyft essentially offering financial services to drivers and their broader community through these through essentially banking like infrastructure, right? But the infrastructure was so crappy, and the APIs, like Plaid had come around, and it was really bad. Right. I think JP Morgan kind of did some work and improved it a bit, but I think it never really took off. But what I'm seeing, look, DeFi has, decentralized finance, which is a loaded word. I think on-chain finance is probably a better word, and now the people are trying to yap neo-finance, whatever that is. So, there's always got to be a buzzword, right? You can't have fintech without buzzwords. So, punchlines. So I think
anything new needs
that's true. Agentic, right? We're gonna go there.
Built without hype in the 1830s. I mean, come on.
Yeah. So anyways, I don't mean to go on a soapbox, right? But I think the thing is that we have so much software now, like open source, really well-tested libraries in DeFi. With stablecoins, are you seeing any applications where people start to use these DeFi protocols on chain in a programmable way and kind of tie it into commerce and innovate that way? I mean, my commerce activity, buying and selling and whatever else, gets tied to my financial activity, and so there is opportunity to create new products. Are you guys seeing any of that come through?
Is that a question for me or?
Yeah, both of you.
Both of us. Okay.
All yours.
So the question is, like, are we seeing these like on-chain products yet kind of taking off? No, we're early. Like, guys, Genius passed, like I said it, that's kind of old news, but in reality, it was only 6 months ago, right? Like, there's still time until Genius is operational, right? Like, the Treasury needs something like 12 to 18 months to basically operationalize the legislation. Yes, we've had these incredible headlines, like Ronit was pointing to, and I believe it's in one of the Citi reports, right? Amazon dollar, Walmart dollar, all of these kind of branded dollars. Yeah, I mean, I think it's still early, like anything, Chain Yoda, and I think you'd agree with me. I think the experimental phase and the kind of innovation phase around these products before, let's say, regulations like fully kick into gear will happen in a kind of decentralized
sandbox,
kind of DeFi sandbox
environment. Either in the sandboxed environment or a full-on permissionless
environment.
Yeah, okay.
Exactly. Yeah. Like, one of the things I would love to see is obviously consumer lending take off on chain. Right now, we only have collateralized like lending protocols. We still don't have uncollateralized like lending products to my knowledge, like your traditional
no on-chain credit cards. We have some cash cards like Cash that are doing very well, but no real on-chain credit cards.
Exactly.
Yeah,
And so that I think we could kind of start to kind of, let's say experiment around things like on-chain BNPL. That would be
Oh
cool.
yeah, absolutely.
I've
Yeah,
thought a
in
lot
crypto it might be
about.
more like buy now and never pay back. But anyway, jokes aside. But hopefully with KYC and reputation, we'll do a bit better than that.
But also like on the collateralization piece, like you can
Yeah,
imagine posting collateral for these, short-term loans and maybe getting more favorable rates and things like this, or maybe more favorable like lending terms, things like this. So anyways, I think there's like a lot of things that can be done there in a sandbox environment before things kick into like high gear. But like I am
right.
curious like what the predictions are in terms of timing from you guys to see some of these concepts, these like stablecoin product ideas, like
So question for
fully.
Ronit. I mean, I have my own opinions, but I'm the host. Ronit, it's over to you.
I want to hear your opinions, Ajit. Okay.
No, yeah, I have terrible memories of innovation labs. I wasted 5 years of my shortish life so far on working with banks on proofs of concepts of enterprise blockchain technology. So I'm very scared of anything to do with innovation. As in, I want to see innovation, but I want to see people use innovation. So I'm a bit, rebellious about it. But banks obviously cannot move at that speed, right? Or even large enterprises cannot move at that speed, which is why DeFi has been so successful, right? Because people didn't ask for permission; they just went ahead and did it. And now the question: look, now we have so much tooling and software that it's time for the rest, the banks and the retail industry and everyone else to put it to work. So Ronit, are you seeing anything from your you travel a lot, and you're in all the right circles, so are you seeing anything come through that's real?
Talking about Circle,
Right.
I better be careful what I say. I've got a bunch of events with them next week in the mountains. So
Oh, we like Circle. We all like Circle. Known Jeremy since 2015.
So
They're really good guys.
the serious point here, jokes aside, is a lot of these developments in 2026 are going to be led by, as much as by the banks, by the fintechs. So you've got the Stripes of the world, the Circles of the world, leading a lot of these, developments, and they not having traditional banking backgrounds. Many of them are applying for bank charters or something like a bank charter, but they're still coming from a background of being more of a fintech or a tech company.
A tech company.
They just move faster. That's one point to make, that a lot of these new developments in the US will be coming from the quote-unquote fintechs. The second point to make about the US is that, and this goes back to the Genius Act and the new administration a year ago, is that the new administration a year ago did change things at the bank level, because now you had a 180-degree almost shift in policy. And as a result, this moved out of being an innovation project, digital assets, to being a, dare I say, a boardroom discussion topic. And so when I called it in my April report, the ChatGPT moment for digital assets, I said stablecoin is going to be the ChatGPT moment.
I've used that term. I'm sorry. I have.
Love that line.
You put a little asterisk so you can credit my report. You probably don't.
I will.
There'll be on-chain royalties.
Excellent. I want the on-chain royalty. At least a nice lunch when I next meet Jelena. But jokes aside, it's kind of what did I mean by ChatGPT moment? I didn't mean mass consumer adoption. A lot of people who didn't read the report, which is most people, would have thought, I think hundreds of thousands of people downloaded it. I don't know how many people read it, but I didn't mean ChatGPT like we all used ChatGPT in 2023. What I meant is that when ChatGPT came out, suddenly innovation departments, quant labs, academic units have been doing AI for 70 years, right? And they've been doing machine learning for 10 or 15 years inside banks, or whatever the number was.
Deep learning for 10 years.
Yeah. In 2023, it became a boardroom topic. Every CEO, every exco was like, what's our AI strategy? What are we doing on AI, specifically Gen AI? I remember I had to give a speech to some very senior people in 2023. I sent my deck in, Ajit. It had 3 things in the deck: AI, digital assets and crypto, and something called the metaverse. Remember that?
I remember especially because Zuck just got rid of a lot of people from
Yeah.
from the Reality Labs
Yeah.
division, and I'm wondering if he's going to change the name of the Facebook to Llama or something.
Like
Anyway,
Q3, it was like a C-level discussion. Like my deck came back from the organizer saying, put the digital assets in the back, delete the metaverse. It's all about AI this year.
that's
Because,
right.
and 5 years before that, I'd given a speech in Abu Dhabi, which is today all about AI, right? 5 years ago, before that, in like 2018 or something, I'd written a report called the ABC of Banking. I might get my dates wrong, so you can fact check me later, but the A in the ABC was AI. And I got up in this bank presentation at a big conference, like no one really was interested. Maybe I just gave a crap presentation, I don't know, but it was amazing. And so my point here was because ChatGPT put this into the hands of politicians, policymakers, C-suite in traditional big banks and companies, they can understand it. And stablecoins became a similar thing because DeFi is this conceptual thing, and
It's a
when you got like David Sachs and the White House saying this is good for America, it kind of changed the agenda. And
change. It.
there's another point to mention as well about speed, which is like here in the UAE, banks can move relatively fast because the two big ones, actually many of them, have royal family state ownership. And there's a top-down agenda here, both down the road in Abu Dhabi and in Dubai, that AI and digital assets are part of the building blocks of the future. And this is something that, is important. So there's definitely a lot of pressure on the banks here.
To actually do something.
More on AI, do more on digital assets.
Yeah. So
speed up the metabolic rate of banks, which tends to be not as fast as the fintechs.
No, I mean, banks used to be pretty good. When I was at Goldman Sachs, right, in 20, I always love to drop that line, right? Name dropping. So, we used to change code in SecDB overnight. We broke code.
Never have a conversation with someone from Goldman Sachs and they don't mention they work for Goldman Sachs.
That's right. It's like McKinsey, Goldman Sachs, and A16Z, one of those, right? So you got it's part of your whatever. So identity. I mean, look, if that's the best thing you ever did, right, then you got to mention it, which is sad. But I think, banks before pre-2008 were extremely, innovative, fast.
Totally fast.
Totally fast. After Dodd-Frank, we just died, right? Innovation in banks almost died. Now Trump is kind of deregulating, and we're starting to see more activity and a lot more, interest in technology all across the board. So now there is this whole narrative on Twitter about, it's banks versus Coinbase, and it's banks versus. I don't buy that at all, right? I think there is banking, right? If you do banking, whether you are a bank or you're a DeFi protocol or whatever else you are, it's the activity that kind of really matters. But I think there is. So what are the use cases, right? And this is if crypto is talking about use cases, we are in a bear market, right? As in, we are in a bear market. So what are the use cases, Jelena? As in, what of stablecoins? Where are you seeing traction? Or
I will say though, hold on. So Genius, I mean, we can like debate like this point I'm about to make if you disagree, but I would argue the Genius Act is the most important piece of legislation since the BIT license in New York, right? And that was like more than 10 years ago, or maybe around 10 years ago, right? Because what did you have 10 years ago? You had obviously Bitcoin, you had like early Tether, obviously that was before ETH, but it kind of set the stage, right, for trading, for centralized exchanges, to be, offer trading of cryptocurrencies, et cetera. Okay, and now we have the Genius Act, which, again, like about 10 years later, which, we could say if we're talking about use cases, we're in a bear market, or we could say, hey, because we have legislation, we could talk about use cases, yay! Like, and also another right, and another thing is like, let's remember this was not inevitable. Like, I'm Canadian, I live in New York, so I'm like a Canadian transplant. There's many of us these days, but in Canada, we were treating stablecoins as securities. Like, isn't that really funny, right? Like
even in the US, Gary Gensler had a strong view that under Reeves,
Exactly.
Yeah.
And so the fact that these are now legislated as payments instruments is just like actually
It's a big
very
unlock. It's a huge
it's
unlock.
just
You can't really do anything in
huge.
financial services without that clarity. So where do we
Exactly.
go from here? So
Yeah. So
yeah, as in what are the
you're
use cases? What's going on?
what are the use cases?
Why
I
do
mean,
we
I can
really
tell you
need
one.
this thing? Yeah, sorry. Go ahead.
Why do we need this thing? Yeah. So I can tell you one thing that we're working on at Noble, and I'm actually really curious to get Ronit's perspective on this based on his leadership kind of on the city side and more the traditional side. So there's a big debate, right? Like with like not around non-US dollar stable coins. Like why haven't they taken off? Why is the stablecoin market 99% dollar denominated? Obviously Tether and USDC being the major ones. Like how do we get on-chain FX? Like what is needed to basically make this a reality? And we at Noble are taking the position and we're investing resources into this that on-chain FX will actually take off in the not so distant future. Part of that from my perspective is you're going to get countries like Canada being very reactive to the US, being very scared around losing kind of monetary sovereignty and basically saying, okay, fine, we're going to treat stablecoins as payment instruments. Will allow private industry to innovate. It won't only ever be central bank digital currencies. CBDCs actually are not the way to get proliferation of these non-dollar stablecoins on chain. So let's invest in a regulatory clarity that kind of makes these things a reality. So I think that is like one factor which will make non-dollar stables take off, whether that's the Canadian dollar stablecoin or the Korean won or the Japanese yen or the Great British Pound or what have you. So that's one element. The other element obviously is on the kind of supply side, and that's basically honestly innovating around like on-chain FX, like AMMs and DEXs. I think today I saw that Solana's GMX V2 will be very much tailored towards FX perps, which is interesting. So you're kind of already, you're already seeing teams like ourselves and so the Solana team, the Circle team at ARC is really talking about
the
this a
Polygon
lot.
team. I'm supposed to.
The Polygon team,
That's right.
So so you're gonna see this, right? Like I don't think there'll be one FX, DEX or AMM or whatever to rule them all. I think you'll have kind of very nice competition there. But anyways, point being, there's both innovation on chain. I think that's starting to pick up like really this year. Plus the kind of reactionary approach from a regulatory perspective. That
so it's really cool that we are allowed now to finally do useful things, right? Because under Gary Gensler, we were not allowed to do anything useful. In fact, the SEC almost went out and said, "Yeah, it's okay if you launch meme coins, but you can't actually like give revenue or to stakers and all kinds of stuff. You can't build anything as long as it's not useful and revenue generating." But now I think the world has changed completely on the other side, which is a huge unlock. So that's a much better take than mine. Thank you for that. So, but one more thing. Well, there are a few more. So the other buzzword that we haven't brought in is agentic, right? So I saw that.
Wait, no, but I want to get Ronit's take on non-dollar stables.
Yeah.
Okay, sure. Then we will go agentic on it.
Okay, thank you.
Whole course is on agents.
Yeah.
You know the agent.
Non-dollar stables, Ronit, are these things real? Does anyone need non-dollar stables?
Well, so far the stablecoin market's been dollars for the reason that the crypto market's denominated in dollars, and it's because in many ways crypto is a uniquely, just like stables are, a uniquely American thing. Decentralization isn't. Chenyot and I were chatting about this earlier in person. Yeah. Decentralization is in many ways a uniquely American thing. Without becoming too pro-American on this podcast, the Federal Reserve is only...
Yeah, I got a boy in the US. I'm very pro-American. Anyways.
Yeah, where's your US flag? We've got to wave the US flag. We still need our ESTAs to stay valid, right? Yeah, absolutely. Don't be stopped at the border. We love the US. What was I going to say? 120 years the Federal Reserve's been around. The country is going to turn 250 years, I believe, this year, right? 1776 and all that. So in one definition, it's 250 years old. The Fed is only 120 years old. There were a couple of attempts at the central bank that Hamilton tried. Based on my reading of history and listening to the Hamilton musical many times, didn't last. didn't last. And it was only in the 1900s. England's had a central bank since the 1600s. So is
the second central bank in the world after the Swedish.
Swedes, the Sverige Riksbank.
Yeah.
So, you know, it's actually, there's something uniquely American about federalism and decentralization.
Yeah, and private money, right? I mean, yeah.
Capitalism.
Yeah.
The irony is that in many ways, crypto is supposed to be, you know, kill the banks, kill the Fed, whatever. But it's actually a very uniquely American thing. Europe, China, India, there's a reason why they've all come out in favor of a CBDC, a centralized digital currency, because institutions, centralized institutions are important in these countries. Bureaucracies, administrations are important. It might be the CCP, it might be the BJP, it might be whoever runs Europe these days.
Yeah, the PBOC, that's right.
It's been a couple of thousand years of imperial exams in China, right? So these kind of state things matter. And so
totally. Culture is a big part of how you make policy.
It's not just the crypto.
Culture and history are a huge part of our policies.
Now, going forward, there's kind of interesting question, right? MiCA actually, ironically, as we all know, was legislated before the Genius Act. We have stablecoin legislation in Singapore, in Hong Kong. There are various bodies here in the UAE. There's actually one specific authority for crypto assets, VARA. So I think you're going to see more development in stablecoins outside the dollar area, but the dollar area is going to be over-indexed on CBDCs versus stablecoins. It might be that some of the kind of pseudo dollar areas like UAE, Singapore, Hong Kong, that are either pegged or connected to the dollar, those countries, a bit like a euro dollar or offshore dollar, those countries can have their own stable coins, but it's basically still a kind of dollar at arm's length. But yeah, I think the big other blocks, Europe, China, India, are going to be, there'll be stable coins in Europe, but I don't think they'll be as big as in the US. What do you think, Ajit? And of course, the UK is not seemingly.
Yeah, I agree with you. I mean, I think actually, that's a really important insight, Ronit. That I've always held that stable coins are commercial bank money, and I think USDC were very early, and they got regulated as essentially an e-money instrument early on in the EU, right? So they kind of have done this the right way, and I think we'll continue to see these types of structures. Now, there are obviously other structures like deposit tokens, tokenized deposits, wholesale CBDC, and retail CBDC. I was expecting the Chinese to try to take on American private stable coins with their own Belt and Road stables, but I think they're going to do that with PBOC's own CBDC that's available across their Belt and Road trade routes. So yeah, I mean, and America also has enormous risk appetite, right? So there's been wildcat banking. There are 6,000 banks. A decent number fail every year. Right, including Mesa Verde in Better Call Saul. Okay, that's not that one. Lots of regional banks, lots of community banks, lots of credit unions. So it's a very different type of structure than what we normally see in most economies. And I think there is also more appetite to let things fail and then fix them very quickly, like Silicon Valley Bank failed and so on, right? So yes, there is a certain American aspect to this, but I think where America leads, often the rest of the world starts to experiment and follow. So, we have seen that in AI. We have seen that with blockchains, right? And we're going to see that with stablecoins as well. But yes, the scale, the most important thing is that people want to hold dollars, right? People want to hold gold. I mean, gold is another big stablecoin, if you will. So these types of, I think, assets will. So now, my favorite topic is always agentic. It's got to be agentic these days. And Ronit, you guys came out with a report in January talking about AI agents in finance, right? And I think it was. I was not as optimistic on AI agents then in finance.
We're a bit early in that report, probably.
Yeah, that was early, but I think we have sped ahead of it. I'm not sure if you're seeing that in large banks, but I think I'm seeing more and more of that with crypto agents, DeFi agents, fintech agents in fintech, and so on and so forth. So where do AI agents, and stablecoins come together? What's the intersection?
Who's that, for me or Jelena?
Both of you. I'm keeping the questions open to both of you.
I'll pass this one to Ronit, if that's okay. I'm still forming my own thesis around this, to be honest. I have a couple thoughts, but anyways.
Yeah, so agents just a couple of days ago, we saw the Google announcement about what they're doing on agentic commerce. And we've had last year, obviously, announcements from OpenAI, a previous announcement from Google, from the major card companies. Everyone's got an agentic commerce program underway. And I think
Shopify in particular. Yeah.
And Shopify partnered with one of the lead partners of Google, and then their most recent announcement that just came out this last Sunday, like a few days ago. And so I think agentic commerce, it makes a lot of sense.
It does.
So in the complex transactions, I mean, I'm already using Gemini and ChatGPT to help me structure my travels, right? One simple prompt I do is, I want to fly somewhere in Europe in the summer where it's unbearable in Dubai. I want to go somewhere that has a direct Emirates flight in 1, 2, 3 countries, like France, Germany, Italy, Spain. Actually, not Spain, it's too hot. And then you say, I want somewhere with the UNESCO World Heritage Site. I want somewhere with, also I usually put in a prompt, no direct flights from the US, because Jelena, your American friends, price out the market. So we need and then it just generates an itinerary for me. We sort of began to use it last summer. We sort of went all over Austria, Germany, Poland, and some amazing places. So now the next step is, now I'm just using it as super Google, right? But we're going to have embedded into it prompts. Here's the hotel in Regensburg that I recommend based on your criteria, based on, shall I just go ahead and book it for you? Yeah, do it for me. It's like having a dedicated personal travel agent.
So what I'm hearing is that you're already, ChatGPT is already telling you what.
Is there when the tokens come in? The simple one is basically my fridge ordering for me. Is my
that reminds me of Silicon Valley, the TV series.
IoT,
You love TV. I love Chain Yoda's TV and film references. I had no idea you were such a.
Why do you think I still don't have my own token? But anyways, jokes aside.
I wanted to just.
Sorry, go ahead.
Oh, sorry. I just wanted to mention this. So did you guys follow the Tailwind drama? They laid off 75% of their staff. Okay, so basically Tailwind, they're it's a tech company. They developed open source software for different CSS frameworks. Basically they're a highly impactful repositories that are open source, that are constantly being used with coding assisting tools like Cursor and Claude. But the issue is that developers are no longer going to the Tailwind website to download these repositories, because they're basically using AI coding tools to pull from these repos. And so Tailwind is no longer getting ad revenue, and they're no longer able to upsell their products and services to developers and to businesses. And so they had to lay off 75% of their staff. So that kind of that made me think, that's broken. That's fundamentally broken. The fact that this software company can only make revenue from advertising or upselling. If you literally go to their web properties, to their domain, that actually to me is a use case for agentic payments, because basically you can embed and say, hey, anytime you're pulling from our repos, assuming these are again the repositories that they want to upsell, or the tools that they want to upsell, there's a payment, right? There's a fee, there's a toll basically that needs to be paid to Tailwind to basically be able to leverage this this software. Because otherwise, what's the business model? How are you going to get people to basically pay Tailwind for their for their IP, for their software, for their tooling, if you're not literally going to GitHub /
Git
whatever
clone something.
yeah.
Yeah.
I think
I mean,
that like software businesses are going to have to integrate AI agentic payments like sooner than later, to literally just stay afloat. Because
so what I was listening to this A16Z podcast episode. I forgot who it was, but they said that look, ChatGPT is already telling me what to do. Right? It's already helping me make the decision. It's almost making the decision for me. The only thing it's not doing is pressing the button on the payment. Right? So it's just not pressing the pay button or sending my credit card to something, but it's already kind of 80% of the way. I'm already going with Claude or ChatGPT in terms of what I need to do, whether it's travel or what I should buy or a whole bunch of other stuff. So the jump from here, especially if you give an agent a crypto wallet, I think one of the biggest bets I'm seeing is that AI agents using legacy rails is going to be a little bit harder, right? I mean, are you going to give it as, I mean, APIs work just fine, but
Why? Because Google's going to push, are they going to push tokens, crypto tokens?
No, but they're pushing stablecoins. So they're pushing, there is UCP, which is a Universal Commerce Protocol, Shopify and Google. That's both fiat and I think it supports, I believe it supports stables also. But then there is X402, which is a slightly buggy standard. I'm not a fan, but Coinbase is very bullish on it. There is another, agent to agent ACP from Google. So there is a bunch of standardization through the market effort that's going on. But I think what's really interesting is that, look, AI agents and stablecoins kind of, having an on-chain wallet, you give an AI agent a policy saying, look, don't spend more than this amount, right? And you give it a certain wallet, like a MetaMask wallet or a private key. That's the easiest thing you can do for an agent or a multi-sig, whatever, and two agents can coordinate. Or you can be the human and the agent can do the other signature, right? So I think there are many ways to do it. But it's sort of this type of automation, right, that we see with blockchains, because ultimately we're automating a lot of stuff. We're making programmable money, right? That's the meme that we've had for the last 10 years. I think that kind of creates, agents are essentially programs. There was a time when there was an app for everything, and that's another Silicon Valley meme. Now there's going to be an agent for everything, right? It's just a new way we build software. I mean, there are a whole bunch of people who are very bullish on, just giving an agent a wallet. Hopefully Kim Jong doesn't hack the agent and so on and so forth. But, I'm always worried about Kim Jong having been hacked a couple of times.
The agent.
Yeah, Kim Jong AI or Kim Jong LLM, right? We got to do a bunch of work on security, reversibility. That's another. So we have to talk about
after regime change in North Korea. But this
that ain't coming, sir.
That YC class is going to be North Korea.
Man's got a nuke and he's next to China, so it's not like Iran or whatever. That's a different topic, but don't want to go there. That's best left to Chamath and the all-in people. But I think compliance. I mean, TradFi. See, we have a history of, like there's a lot of anti-fraud software in payments. There's a lot of AML monitoring software. There's a lot that goes on in the back end of payments that I think a lot of we never get to see in crypto. Crypto is kind of a one-way street. Are you seeing any innovation on that front, or any efforts to make payments more realistically usable in mainstream finance settings by bringing in this type of tooling?
Well, I mean, I don't know. Like, this is a very general question, but by the way, I think we do have like a few minutes, if I'm not mistaken. Although I'm not the host,
minutes.
So
we have 10 minutes, right?
Okay.
Yeah, 9 minutes. Yeah.
9 minutes. Okay. So listen, one thing that I am just following very closely, there was an interesting announcement from Wallet Connect with Ingenico, basically having like native stablecoin payments at the point of sale. This isn't directly answering your question because you kind of like asked about like mainstream finance, but just like general like payments flows, that is something that I am kind of following, which is not really a reality these days, because even if you can, load up on a stablecoin wallet that's attached to a Visa or MasterCard card, it settles in fiat, right? It's not like the store or the retailer isn't directly accepting the stablecoin in their, on their back end. So that's something I'm curious about. Online, like wallet to wallet, like what Shopify is doing with USDC, that's a reality. But yeah, like the in-person payments, I think is like missing. So it's not a reality, to answer your question.
Yeah. So Ronit, are you seeing anything? Any efforts to make?
I think this is more forward-looking than happened already, but embedding compliance, embedding those kind of AML. If you go up of many layers and say, does the current amount of effort and expense being spent on AML, financial crime fighting, etc., how big is the ROI? Can we do it better? Of course, we can do it better.
Yeah.
Do we need to stop bad guys, money launderers, whatever, human traffickers? Of course, we need to stop them. We're throwing lots of people and money at it, have been doing for the last couple of decades. Can it be done better? Of course, it can be done better. So, one of the sort of rosy tinted upsides of stablecoins is that some of this can be embedded directly into the protocol, into the contracts, into the token. So that's something that gets pitched to us, that we talk about, but let's see it happen. But having that embedded, it's a bit like saying having the payment embedded in the software, right? We built the system which everything is an add-on. We have the information flow, the internet, then we have the payment layer, then we have the compliance control layer, and then it's just like it's a big tower. Yeah.
One of the things that the most boring things, having done post-trade and market infrastructure with blockchains, is reducing reconciliation, right? So merchants kind of have to deal with multiple payment schemes. They have to manage paper and PDF invoices and payables, and there's accounting software which is completely different from payment rails and their online banking software. There is feeds that they have to download. It's just a mess, right? And small businesses cannot afford that cost. So what I'm excited about is something truly boring with blockchains, which is if we can in a large network of suppliers and merchants, if we can reduce reconciliation to a minimum, right, where we have like a single source of truth and all the transactions are kind of on-chain, access controlled, and we can take out a lot of the reconciliation, then we can take a lot of cost out of the system. So we have 5 more minutes. So
basically you're saying make middle office great again.
Get rid of them. Get rid of all the back office bros, as much as possible. Replace them with AI agents, Excel agents, right?
Blockchain, okay.
Blockchain. So I mean, there is a really funny person on Twitter called Guart, and blockchains are actually back office software, right? I mean, we like. So, but yeah, okay. So very interesting space. Now. Jelena, what's the plan for Noble and for you guys for the next 1 year? Where are you guys going to be? How much volume?
Yeah.
How many unbanked would you have banked by then? Sorry.
We have a very chunky. I'm calling it a very chunky Q1. It's very chunky. A lot of milestones being, hopefully hit, planned for. So the biggest one is we're launching our EVM L1. So we're migrating off the current stack completely, which is obviously the Cosmos kind of original Tendermint stack, to an EVM L1 with Commonware as a consensus mechanism, and basically launching with a couple of flagship applications, one being FX DEX, kind of like the early kind of V1 version of this FX DEX concept, and then also a lending product as well with Noble Dollar. So yeah, stay tuned. A lot happening. We have some exciting announcements on the corporate side of things as well that we'd like to share. And it's all.
And Ronit, how are you? How is the Future Money book tracking on how reality is shaping up? I mean, it's a fascinating book. First of all, so congrats on that. I really enjoyed reading it. I shell it all the time.
I need to write the sequel.
There are very few things I shell for free. There are very few things I shell for free. Your book is one of them.
Excellent.
The other is Bitcoin and Ethereum. So,
so basically, my book, Bitcoin is italic. I mean,
no. So how is it tracking on reality? As in,
I think there were sort of 3 forward-looking areas we talked about in the book. We joked already about the metaverse. That didn't quite work out like it was supposed to. Yet. Actually, to be fair to myself, I always define the metaverse as mixed reality rather than virtual reality. And the amount of time I've got like 6 or 7 different meta glasses in my house. So, I'm a buyer of the the mixed reality world, the augmented reality world.
This is all very concerning.
That's I'm going to get some more when I go to New York, because the new ones don't get sold here either in the UAE or the UK, the latest version, the 2.0 version. The digital assets section, the crypto section, I think this was written before the current administration in the US. So the speed of institutional mainstreaming, both on the buy side that we saw with the BlackRocks of the world, and now we're seeing on the bank side, whether it's in digital assets, whether it's in deposit tokens, that's all moving probably faster than I wrote in the book. And AI as well. AI is everything, right?
So you're moving so fast.
I wasn't bullish enough on AI in my book. Everything is AI.
If I had enough stable coins, I would do nothing else. But anyways, it's been a real pleasure, having both of you as a builder and as Ronit as sort of the frontline thinkers and researchers in the space. Thank you for joining us today. It's I'm sure we'd love to get you guys again. We have another friend.
Person once, all 3 of us in the same place.
That would be very fun. Let's do that.
New York,
I love that.
8.
Yeah, I think we should also get our friend Brett King. We should also get our friend Brett King. He was right about AI, and he was way more right than me. I was in selling AI to Saudi Aramco in 2019. Again, too early. And he was right. And I don't know where he is these days, but I think we should catch up with him and see what's going on with agentic.
I think Jelena have agreed to meet in New York in March. You better join us.
Awesome. Absolutely. As long as stablecoins keep going up.
I think they will. I
thought one stablecoin was equal to one stablecoin. No.
As long as we are allowed, I'm allowed to earn yield on my stables. I'm sure I can.
Take care, guys.
Great. Take care. Thank you so much.
Thanks, guys.
Yes, have a very